All right. Good afternoon, everybody. Welcome. Well, all right. Let's take a minute, give some maybe a little brief introduction here. Make sure that you guys can hear me all right. So yes, we are officially starting here. Let me know you hear me. Yeah, awesome. And please chat in where you guys might be joining us from today. That's my own curiosity here. So welcome everybody. Looks good. Sounds good. All right. You should see on your screen Ultima alert. Just hear my voice. I'm not putting the camera on today. I'm not ready. I'm not ready. Um, I had a little bit of a technology issue on my side. So again, chime in. We're going to start with some informalities here momentarily. So please, chime in as we go here. All right. Cool. Excellent. So, all right. I think it's about that official start time. Anyway, a few Nick was saying, I didn't hear anything. I didn't see anything. You hear it and see it now, don't you? Anyway, Nick, let me know you're all right. It's okay to go. I'm okay to go. So we like to start on time. So a few informalities. One of the first things is people always ask, can I ask questions throughout the course of it? Yes, by all means, please do ask questions throughout the course of this. I am reading the chat in real time. Everybody always asks also if this is recorded. It's not recorded. We're live. Okay, we are live right now. A whole lot going on inside of the marketplace, but that's okay. It's okay. We're going to be just fine over here. We have a huge amount to go through. So again, welcome everybody. Um, excuse me. My name is Don Kaufman, and I'll be with you here for, probably about the next 90 minutes or so. This is Ultima Alert, a high probability income generator. Again, my name is Don Kaufman. A little bit of a risk disclosure. We're not financial advisors nor a broker dealer. And one of the reasons I bring that up immediately is I spent about 15 years inside of the brokerage world. So I always throw it up here. I am out. Contest. Anyway, next few housekeeping items. Look, we're going to go through a huge amount in today's session, and I will probably run upwards of about 90 minutes or so. So sit back, relax, shut the door, turn off Skype chat, whatever else is distracting you. Definitely close Facebook, delete Facebook permanently. Phones on silent mode. Definitely kick out the kids, the grandkids. Look, I'm going to go through a huge amount. There is a lot of education packed in here, and you took the time to be here, so it's important. So focus, focus. I know that's tough to do these days with everything around you. I am broadcasting. Somebody was just chiming in where they're from, and again, I always encourage that. I'm kind of curious where everybody's joining us. And people kind of join us from all over the world, but I am broadcasting today from St. Croix. I'm in the Virgin Islands, and actually, I'm over right now at my partner's house. My place lost power. That's one of the maybe not so upside. They don't put that in the brochure of the Virgin Islands, but you lose power often. And my generator failed as well. So I'm a refugee right now in a condominium that's down the street. And I got to tell you, the view, okay, the view out of his place is absolutely spectacular, distracting, if you will, because it's that nice. If you guys know St. Croix, I am like on the water. Couldn't be more on the water if you were in a houseboat. It's awesome. Anyway, with that, so welcome everybody. So we're going to go into a tremendous amount of detail about generating returns in Ultima. IWM, for instance, like a 62% return, and QQQ a 49% return, and the Spider a 50% return. That's why I say sit back, because I'm actually going to show you these exact trades where these returns were actually generated from is one of the most critical aspects of this, right? In addition to that, we're also going to provide you a free auto expected move indicator. This is our gift to you. And stay with me right to the end of the webcast. We'll provide you a link to this. And this is an indicator, okay, that is used specifically for Ultima. And I normally jump to a screenshot of it, but forget about screenshots. We have a live market over here. and go into something like the spiders. If you're not familiar with the spiders, the S&P, and the click of a mouse, okay, we've actually got what we term auto expected move indicators. It's how the options marketplace handicaps forward risk. It's a really slick way to look at forward risk, but there's so many different things you can do with this indicator. And again, if you're not familiar with it, like you can look at it in stuff like pretty much any individual stock. This happens to be like in Netflix. You can see, all right. And in fact, I'll even highlight in here. You can see like we literally clipped, if you will, the upper edge of the expected move and reverted back down. It's the options marketplace. And an options marketplace, it's not like a MACD or a Fibonacci or a Bollinger Band, right? The options marketplace is billions of dollars handicapping forward risk. And that's one of the reasons we use it so extensively, specifically for Ultima. So stay with me right until the end of the webcast. I will give you a link to this, and you'll have a indicator. It's a $500 value. Auto expected move indicator helped me find winning trades. Again, the spiders, 60% in the spiders, 50% in the QQQ, 64% in the QQQ, 52%. There's even more winning trades, QQQ, 50%. Okay, TLT, 53%, spiders, 50%. And again, I will go into a lot of detail around these trades. So let's get down to business. This is why you're here. Obviously, we're going to discover why Ultima trades are ideal for the current market environment. So you can potentially generate income. Now, that income is going to be monthly income. And I'm actually going to show you that the average hold time for many of the trades, it's just under 30 days. People always ask that question. How long am I going to hold this trade? It's under 30 days. You're going to learn a trading symbol that professionals use on a daily basis to create Ultima trades. Okay. Learn how and where you can find edge. That is really one of the things like I talk about implicitly. Okay. The word edge, if you're not familiar with it, well, you get familiar with it. So we're going to talk extensively about edge. That is something that's like mathematically repeatable, where you can put this trade on, take it off, and put it on and take it off. It's repeatable. You're going to reap the benefits of high probability trades while learning little known secrets to not taking large losses. We're going to find what products make some of the most viable candidates and what products are a recipe for disaster. By the way, listen carefully here, okay? And again, chime in throughout the course of this, so I know everybody's alive in here. But when I say talk about products, like what do you trade? What do you trade in here? And that's going to make a critical and differentiating factor. It's not just about trade. Oh, there's a perfect setup in the MACD and the Fibonacci. It's about what you trade. And you're actually going to see very interesting. Like as you were looking earlier, it's QQQ, it's TLT, it's spiders, stuff that everybody pretty much knows, right? So what you do not need. It's not too often that you're going to come into, a learning session and somebody says, "What do you not need?" And the reason I bring this up is because I'm always kind of fighting with people throughout the course of this presentation. Look, you do not need a large trading account. Okay, margin is not going to be an issue, and so you could do this with as little as $2,000, and you can do it in an IRA. If you don't have a lot of time, it's okay. Okay, when I say you don't have a lot of time, right? And I want to be very, very clear about the time factor on here. Okay, when it comes to the time factor, just relax, right? Because you can use a lot of GTC, and these trades come right directly to your phone. Trading experience, we can have up and running, okay, in the first few hours. You're not going to, again, need a lot of margin. Some of the trades have as much as about 600 margin. That's it. And I say as much as, okay, look, that's, you'll see the trade here momentarily. Okay, but to tie up a minimal margin is absolutely critical so that you can do this with a smaller account. You're not going to have a lot of technical knowledge. And when I say technical, I'm not talking about technical analysis. I'm talking about being a tech geek, right? You have a phone, you have a tablet of any kind, an iPad, a computer, it's fine. Okay, you're not going to have to be isolated. We have a really supportive community. Okay, help you every step of the way. There's no hidden fees. There's no high commissions. Commissions are nominal these days. The cost of trading is extremely small. And this is not going to be an extraordinary amount of risk. Okay, we are incredibly risk averse here at TheoTRADE. We're going to show you how to minimize your risk. So with that being said, everybody ready to get started? Okay, yeah, we're good. Yeah, all right. Okay to go. Okay to go. So Dan, hang in there. So he's talking about interested in trading futures and so forth. Okay, we're going to talk a little bit about that. Here's a bit about me. So to kind of give you, I guess the nickel tour. I watched order flow for 15 years, and that's in large part what's actually brought me here. When I say order flow, okay, look, before I even get into like my background, I got to see for the better part of 15 years everything that you did, right? Meaning that I worked at thinkorswim. Okay, I was employee number 13 of the I'll call it now the infamous trading firm thinkorswim. So for those of you that don't know the story of thinkorswim started basically in about 99. I officially joined them in 2001. And what I did there is I did actually help a lot in building different aspects of the thinkorswim trading application. But my main goal was I ran education. And I ran education even after TD Ameritrade bought us. It was about a $700 million deal at the time. It was a great, a great deal for me. But I went on to run education for TD Ameritrade and their 7 million clients. And so that's more of like some of the professional career. Even before that, though, people always talk about stories of like, how did they get into trading? They're like, I was a teacher and then I was a trader. I was a taxi cab driver and then I was a trader. Okay. I was none of that. I was a trader and then I was a trader. I grew up around this. I had family that was in the business. I've been around it my entire life. I have no idea when I learned about what a call or a put is. I really don't. I grew up around it. I remember like, Thanksgiving and like holiday meals with the family, talking about in the money, out of the money, and like, oh, this arbitrage is so good. But anyway, I grew up around it. So in large part, what brings me here is this group here at TheoTRADE is predominantly from both Thinkorswim and TD Ameritrade. We have like Brandon Chapman, and we have Todd Sweet. Okay, we have Blake Young, and we have Jeff Bierman. Many of these individuals work with me specifically at Thinkorswim, and we bring a huge amount of the knowledge base, okay, of what works best for retail traders. And I stress that to you, what works best for retail traders. So with that, okay, if you ever need to get a hold of me after today, just Don Kaufman, put that in the subject and just go support at TheoTRADE.com. And again, I just want to mention that because I am an individual that you can absolutely reach. We use a common inbox, support at TheoTRADE.com, but just shoot me an email. Okay, it goes right to me if you put Don Kaufman in the subject. All right, so onward and upward over there. Okay, if there's any questions, background, so forth. By the way, people always ask, why'd you spend an extra couple of years at TD Ameritrade? I signed a 5-year lockup clause for TD Ameritrade. When TD Ameritrade actually bought Thinkorswim, they gave me a 5-year deal, and I exited in 2015. We ultimately launched TheoTRADE in 2016, and took a lot of the group that I worked with me. So this is actually this is the last time I was in Chicago. It's crazy, but so I do like weekly appearances, and this is literally a weekly appearance on this was TD Ameritrade TV, which is now known as Charles Schwab Network. I'll do some CNBC from time to time. That's myself pitted against Kevin O'Leary. It's, years ago, but it's like one of the more memorable ones. You can be on CNBC, dozens and dozens of times, but they don't usually pitch you against Kevin O'Leary. Nobody really wants to get pitted against Kevin O'Leary. Me, I'm like, sign me up. I like it. I was the short, he was the long. I was very after that. Onward from there, this is Investors Business Daily. For those of you who don't remember Investors Business Daily, that's William O'Neill. It's Bill O'Neill. It was his paper. And this was last year. It was actually exactly a year ago that this came out. And it was, I was Trader of the Year here for IBD. It was actually the best year that I had since the financial crisis. So, and by the way, what I spoke about at Investors Business Daily was exactly the trade I'm showing you today. It's Ultima. Okay, it's completely Ultima, and Ultima really enjoys risk, and we're going to talk just about that. So here's a sample of some of the trades I did in 2022. IBD used to name me Trader of the Year. Bonds 54%, ES 53%, ES 55%, bonds 64%, ES 51%. And I'm going to show you these exact trades and many more just like it. So let's dive in. People always ask this as well, like how do we do in 2022? The Ultima portfolio returns on a $50,000 account. It's 56.6%. It's $28,314.75. Now, as I was saying just a moment ago, I said, like, this kind of strategy loves to be in a high risk environment. It doesn't mean that the strategy itself is risk, okay? But the more chaos, the better. Market chaos has arrived. It's not going to abate anytime soon. Is inflation cooling? I put that in there because today the CPI report came out. I don't know. I got more questions than answers after that one. The Fed's actually pushing rates higher and contracting the balance sheet. Just continue to push rates higher. Okay, tomorrow is a Fed meeting. We're going to see. Are they going to continue to be on their path, or is it the last rate hike? People are talking about rate cuts. I think they're crazy. Strong dollar. The dollar is actually strengthened again, and geopolitical risks continue to proliferate. One thing that I always want you to embrace about the strategy we're about to talk about, I call this game on. Just embrace the chaos. Look, markets, they got real in 2022. Okay, stock picking this year, it didn't play well. I mean, when you look, I have a list of stocks right here. When you start looking down the list, some of the usual suspects here, what's really performed this year? I'm serious about that. What's really performed? This is year to date. What's performed? Okay, when you start looking around sectors and so forth, have the utilities performed well? No. Okay, what else you got? Have the financials performed? All right, they're up about 6%. Okay, what else you got? I mean, the bottom line, look, I could take you through this again and again and again. Has the energy sector performed? No, it's down about 4%. The only real performance has come by means of 7 stocks. I mean, almost all of the returns this year, okay, are akin to those 7 stocks. Obviously, we term them the Magnificent Seven. You know them, you love them. But I'm going to tell you right now, stock picking, it's not going to cut it. It's just not going to cut it because a lot of portfolio managers that are going to dramatically underperform. You're going to need a strategy that embraces chaos, embraces volatility, doesn't rely on directional bias, and reduces risk while sustaining monthly returns. That is what ultimate trades are. Okay. And what are ultimate trades? Well, first of all, okay, implied volatility and skew has resulted in significantly more options premium. Okay. We're going to talk extensively, right, about trades around this symbol skew. For those of you that have no idea, never pulled this up, it's SKEW. Okay, SKEW, and I apologize, there were some misticks in here, but I'm just going to look at, like, for instance, a 5-year in here, and I want to show you skew. It's way up there. It's like 140. This, okay, is a very, very, okay, target-rich environment right now. And what skew basically means, well, we're going to get into that. We're actually going to show you in the context, okay, of a couple of trades. So bear with me as we get into this, but skew is critical. All right, skew makes the option price higher. Now, I know that I said option, and I know I said the O word, and there was somebody in here, I don't want to trade futures. Well, we're going to actually look at that today. Ultimate trades, though, are designed to sell options premium while reducing risk. Okay. And a lot of people have maybe dabbled in selling options premium. Don't freak out just yet. Okay. We're going to talk about that momentarily. Learning to sell options. Now, again, a lot of people hear through the grapevine that selling options is a way to be able to make money. But if you've experimented with it, and this is where I want some feedback in here. Okay. If you've experimented with selling options, you know full well there's risk involved, right? How many people have ever done this? When selling options, and again, I know that some people are just vehemently opposed to options, like, I can't do it, man. It's options, and I'm afraid. Hold me. Because what happens to people very often in options is they make some money, and all of a sudden, bam, they get hit over the head. Okay. And it's all of a sudden they end up losing a lot. And it happens to many people that have learned to sell options. But what strategy are they using? What are they employing as a risk management methodology? Okay. Look, has anybody been through that where you make money, all of a sudden you get hit by a Mack truck when you just kind of least expect it? Okay. Nobody's ever done that. Come on, people. Admitting it is the first step today. So that little webinar chat, chat in over there. It is amusing to me. Not losses are amusing to me, just the fact that we actually can go back and forth over here. So today's session is going to separate myth from real risk, fact from fiction, and selling options premium. We're going to get into this quite deeply here, but I want everybody to know, look, do not panic. Okay, don't panic. You may know nothing about options. That's okay for today's session. All right. It's okay if you know nothing about options. Look, if you know nothing, just grasp big concepts. What's big concepts? Right? Probability, risk, right? Just understand conceptually where we're headed. Again, I want to reiterate, selling premium can be done in extraordinarily small accounts. Truth is, in a margin account, okay, it's that looks like a Z, but it's $2,000. Okay. That's a two. My two is not good. I don't have my special little right on board over here. Okay. Anyway, that's not supposed to say 20K. It's supposed to say two. Okay. Two. There we go. I got it. As little as $2,000, $5,000 in a retirement account. So let's dive right into it. Let's get into it. And all right, there's a lot of different facets of selling premium. Okay, people, when we talk about selling options is sometimes referred to as what we term selling premium. Okay, we'll explain premium in a moment just here. Okay, now look, some of you have some decent experience. Some of you are complete and utter novices. That's okay. We're actually going to try to hit both sides of the spectrum today. For those of you that are complete novices, we'll start at the basics and work into the extreme. For those of you that are at the extreme level, that you've traded before, you really have a better understanding of this. I stress to you, sit tight, because even the most experienced trader is going to pick up a lot in here. A lot. And it's very, very critical that you understand that, again, this is really going to hit both ends of the spectrum in terms of absolute novice to some of the most extreme. Now, selling premium basically implies selling options. Now, selling options could be called credit spreads. You can call it short call spreads, short put spreads. There's bull call spreads and bear call spreads, and it just goes on. And there's there's conversions and reversals and mambo combos and delta neutral trading and selling naked. Look, you can create bullish and bearish and iron condors over here. Generally speaking, today though, I'm going to look at market neutrality in terms of positions. Okay, I'm going to look at market neutrality. Another aspect is people make this business far more difficult than it needs to be. In the end, what do we have? Okay, on one side we have calls, right? And the other side, what do we have? Puts. Okay, and that's it. Like, how bad can this business be? People talk about, condors and mambo combos and credit spreads and boxes and jelly rolls. They're all names of strategies. In the end, it's a call or it's a put. And what can you do with it? Well, last time I looked, you could be a buyer or you could be a seller. And that's it. Don't overthink this business. Okay. And we're going to start very, very simply here in just a moment. By the way, how our members are doing. Okay. TheoTRADE, place with a comprehensive set of resources to study and exceptional instructors, beginning with Don Kaufman. I have a PhD in quantitative economics. I've learned more about the markets and the economy from listening to Don K, when the Fed spoke, than from any of my graduate studies. All of the instructors offer unique seasoned trading analysis and insights. The chat with other members is exceptional. Lots of shared wisdom there. You can go as deep as you want or stay in close to the shore in the shallows, your choice. Takes a while, to make pickles, gain with maximum benefits for TheoTRADE, but it's well worth the cost, time, and effort. My review is based on multiple years of experience with TheoTRADE. I'll just cut this one off over here. In general, highly recommend for Theo. I'm grateful for Theo in my part. About 5 years of experience in here. All right, so let's get down to it. Let's start talking a little bit about trading in here. Your trading is based on probability. So we can create trades all day long with a 90% probability of success, but you could still technically lose money. I like to tell people that right up front. Probability alone does not make you profitable. The one thing, and I want you guys to think about everything that you've ever listened to in this business, and I'm serious about this, everything you listen to in this business, they bombard you with what? Material about where's the stock going? Where's the stock going? Where's the stock going? How many people have heard that before? No, nobody? How many people have heard that? Where are we going? Where are we going? It's going higher. It's going lower. It's going left. It's going right. People hear this constantly. Okay. Do you know, though, that you can be right 90% of the time? You can still lose money. That's the one thing nobody seems to mention. CNBC and Bloomberg and all the different networks, what's it worth? They just get people on there and they go, what do you think Apple's going to do? I think it's going up. Okay, that's great. You can be right 90% of the time. You can still lose money. Markets, they're always a trade-off. They're always going to be a series of trade-offs. Higher probability equates to higher risk. You can be right 90% of the time. You can still lose money. Where can you find edge? Because that's what people are here for. Good, because that's what we're going to get into right now. This is very important. So, all right. Discovering probability and premium selling tactics. As I said, I'm going to start with some of the basics and kind of work our way into the extreme. So this is a $100 stock. Now, do I own stock? No. Do I want to own stock? No. Why do I not want to own stock? Probably a lot of risk. It's going to tie up a lot of capital. You have like a $3,000 account. I don't think you're going to be buying a $100 stock, right? You're like, I own a share. Okay, that's okay. But at the same time, you want to be profitable out there. You want to make some money. What we're going to do is we're going to use options. And in this case, I'm going to come all the way out here. And the first idea I'm going to look at is buying, not selling, but buying. I'm going to buy, all right, a 120 call. I'm going to buy a 120 call, and it's going to cost me exactly $1. That's actually what we're going to call a debit. Now that thing is going to be good. Let's put a time frame on there. 3 months. Okay. Again, I don't have my little right on board today. 3 months. So I go out there and buy a 120 call. Now, some of you are absolutely unequivocally brand new to this. If you go out and buy a 120 call, let me ask you, what does a 120 call do? Okay. If you're new to this, you may not know. 120 call, what does it do? It gives you the right to buy the stock at 120. Now, where's the stock presently trading? Presently trading at 100. First of all, can the stock even get up to 120? Of course it can. Given 3 months of time, a lot can happen in 3 months. So you buy a 120 call. For those of you, again, if you don't know what a 120 call is, it's just, again, it gives you the right to buy the stock at 120. Do you have to buy the stock at 120? No. Okay, but it's the right to buy the stock at 120. If the stock gets above 120, you might want the right to buy the stock at 120. Because if you think about it, what if the stock went to like 130? If the stock goes to 130 and you have the right to buy the stock at 120, oh, you have the right to buy the stock at 120. The stock's now trading at 130. That'd be pretty good, right? How much would you make in there? Forget about the dollar that you paid for it. How much would you make? Anybody? Okay, I am not moving on until somebody gets this. You buy a 120 call. Now the stock's trading at 130. The 120 call has to be worth at least what? At least how much? Anybody? Okay. Okay. It's going to be worth at least $10. It's going to be worth at least $10, right? Now, obviously you paid $1 for it, so you're going to be making about 9. But again, a 120 call with the stock trading at 130. If you have the right to buy the stock at 120, you technically could buy the stock at 120, sell it in the open market at 130, and you'd make your $10 that way. But I want you to know what is termed intrinsic or real value. So, okay, that's true, but most of the time, what's going to happen to this option? Let's not, kill ourselves with this one, but this option is 20% away from the underlying price. It's 20% away from the underlying price. And that's a big move, big, that's going to have to happen in there. So for the most part, what do you got? And a lot of times stock can stay flat. If stock stays flat, you lose your buck. Stock goes down, you lose your buck. Even if the stock goes up, you may actually lose your dollar. There's an incredibly high probability this trade will not work. But if it does work, you could, in theory, hit it out of the park. Does that make sense to everybody? Okay, I just want you to understand a little bit about what I would term the buy side first. And then we're going to look at the exact same idea. We're not going to buy it. We're going to sell it. I mean, it just makes it like easier when you go through and look at both sides. We're going to sell, right? We're going to sell a 120, all right, 120 call. What do I collect? All right, I'm going to collect exactly $1. So I sell a 120 call. And this, I'm going to make it good, okay, for 3 months of time. 3 months of time. So I sell a 120 call, I collect $1. First of all, when you collect $1, you sell that thing, what's the most you can possibly make? This is a $1, okay? And it's what we term a credit, right? If you sell something for $1, what's the most you can make? Make $1. Can you make more than $1? No. You sell a 120 call for $1, the most you can possibly make is $1. Now, for those of you that are brand new to options, buyers have rights, sellers have obligations. The one thing that really kind of freaks everybody out is the fact that you can be both a buyer and a seller to open the position. And you're like, I'm not sure what that means. Well, you can open a position by being the buyer of the 120 call, but you can also open a position by being a seller of a 120 call. And if you sell a 120 call, you're obligating yourself to give somebody stock at 120. Do you have stock? No. I want you to imagine in this example, don't worry about margin. There's always one in the crowd. They go, what about margin? I can feel you typing in right now. What about margin, man? What about margin? Okay. I can't take it. What about margin? Don't worry about margin for a second. What if we can circumnavigate a little bit of the margin? Yeah. Does that sound good? Circumnavigate some margin. I want you to go out and I want you to think about selling a 120 call. No, do you own stock? I do not own stock. No stock. Okay. So I don't own stock. I'm selling a 120 call. If you sell a 120 call, you collect $1. Now, what do you do after you sell the 120 call? You do nothing. Everybody's doing something. I am doing absolutely nothing. Do I have to wait 3 months to make a full dollar? I do. Wow, that's a horrible trade, but time out. We're not here to explain that this is the end all be all of trades. What I'm here to explain is from a probability point of view. What's the probability? You guys tell me, what do you think the probability of making money is on that 120 call? Just take a shot at it. You're not going to hit it all that accurately, but who cares? What do you think that the probability of making money on that 120 call is? Anybody? Anybody? Okay. You guys tell me, what do you think it is? All right. Think about what a stock can do. And again, this is just, it's conceptualizing this, right? And it's so important. There's a lot of people on, okay, and very, very few answers in here. Very few answers. Well, let me first state this, okay? Let's state this. When you have a stock trading at 100, what are the chances of it going up or down? 50-50. Right? It's just, and you're like, but I used the MACD and the Fibonacci. It's 50-50. We're not going to here to argue, okay? But it's 50-50. So there's a 50% chance it goes down. Is there a 50% chance it gets to 120? Not even close. Not even close. And you got to say probably diminished probability of it getting to 110, but getting to 120. Okay. So what could happen here? If the stock goes down, keep your dollar. If the stock stays flat, you keep your dollar. Even if the stock goes up to 110, you still keep your dollar. If the stock goes all the way to like 119, you still keep your dollar. You'll wet yourself, but you keep your dollar, right? This trade makes money even with like a 20%. And again, it would be like a 20% rally, okay? And it would still make the dollar. The only way you lose is if we're above 120 plus the dollar you collected. So you start losing money above 121. And we can get crazy. You can get crazy in this, the marketplace could go all the way like, what happens if it gets to 130? You get killed. Okay. The reality is this trade has upwards, okay, of over a 90% probability associated with it. It's actually greater than a 90% probability. You like that one? A couple of you guys actually chatted in like 80%. This one though is closer to 90%. Okay. Now you look at this and you think, it's whatever, man. I'm not waiting. You think I'm going to wait 3 months to make $1? I didn't ask you to wait 3 months. I didn't ask you to wait 3 months. Or actually, we've got a better way to do this, a much better way to do this. But I need you to understand conceptually what we're doing. We're selling a way out of the money option. Like if you want to conceptualize this, like you're sitting, okay, at a football game and you are in the furthest out, the highest seat in the entire thing. You're definitely not sitting where Taylor Swift is sitting, okay? You're not in a nice warm box, okay? You're basically up in the nosebleed seats, okay? And that's okay because there's like a 90% chance that you're not going to have to do anything up there, right? Okay. And again, could not be more straightforward. Now, we're going to take this and we're going to apply it to the live market. People go, how are you going to make money with this stuff? We're getting there. We're getting there. And I'm going to write all of this up so you can see it. Now, markets today, they're not doing a lot. We're going to go in and we're going to look at spiders. Is everybody kind of familiar with spiders? Okay, everybody familiar with spiders? Anybody? If you're not, the spiders are the S&P 500. The S&P 500. And I just want to make sure that everybody understands what a spider is, okay? Because it's like S&P 500. And I think it's kind of a marquee product. And I'm very comfortable like talking about it because my assumption is that most people have familiarity with this product. I'm going to open up an option that's 94 days to expiration. Okay. And I'm going to do exactly what I did in the previous example. I'm going to go way out of the money, way out of the money. You can see, look, I don't mind ever showing this stuff because I don't just speak with, words. Anything I talk about, I'm going to have positions on. One of the things I didn't even mention so much today, everything I do, it's completely open book. You can see every position I put on, right? You want to see every position I put on, profit, loss, every detail. Okay. We are completely no holds barred approach, right? We let you see every portfolio. And I've got, different portfolios in here and so forth, but there's a TheoTRADE portfolio over here. Okay. Over here on Tasty, I've got a bunch of different portfolios built here on Tasty. Okay. But again, it's complete no holds barred approach where you get to see every trade I do. Okay. Profit, loss, for better, for worse. Okay. And it's such a critical, and it's like, I hope that that's a little bit refreshing to you because again, people just talk about like, oh, I make this and I make this. Like, look, all right, you're going to do this. All right. You have to have somebody that actually does trade this stuff. Obviously, I have positions on in these products, and I'm comfortable putting more positions on in these products. What we are going to do is in this first example, I'm going to examine the 500 calls. Okay. Now, the spiders, where are they trading? Right now, they are trading at 462. I'm going to go out, right? And I'm just going to make a quick argument over here, and I'm going to write it up. I'm going to sell, right? I'm going to sell the what? The 15th of March. So that's out there a ways. The 15th of March, okay? 500 call. What am I going to sell it for? Oh, $1.12. Okay. I'm going to sell it for $1.12. And that's $1.12 credit. So I just want to make sure everybody understands. I'm going to sell it for $1.12. If I sell something for $1.12, first of all, what's the most I could possibly make on it? By the way, see the market in here? I'm going to highlight it. See the market? It's 111, 113. I'm going to come in here and sell one at $1.12. Okay. Now they fill me or they have to represent me. There we go. We're filled immediately. Okay. When I say fill me or represent me, the market was 111, 113, and you just saw me fill. You go, are you really filled in there? Oh, I'm filled. Okay. I'm filled. You can see sold one spider, $1.12. Done. Filled. So I just sold a spider. Okay. Why? Well, now we sold a 500 call. 500 call obligates me to do what? Okay. To give somebody stock at 500. Do I own any stock? No. Okay. Look, right now the market's at 462. That's a long way away. What's the market done recently? Like, I'm not going to talk about direction to a blue in the face, but has the market even ever hit? Let's go in. Let's get crazy. Has the market ever hit 500? No. So I would have to actually be at all-time high. That is correct. Would have to be at an all-time high. Is it possible we could hit 500? It is. Okay. But I want you to look at this from a very different scenario. So I just sold something literally, okay, for $1.12. Okay. I just sold something for $1.12. So the most I can make is $1.12. We're not going to do that. We're only going to hold this thing for a very short period of time. Now, the market can go higher, the market can go lower. Look, all things being equal, let's just say for argument's sake, okay, that the market stays flat. And the market stays flat, okay, for a period of about 30 days. In fact, here, okay, there's a 94-day expiration. That's exactly where I just sold that. Then there's a 66-day expiration. How many days are between 94 and 66? Anybody? How many days are between 94 and 66? What was that? It's exactly what? 28 days. Okay. It's exactly 28 days. So in 28 days, what I'm going to do is I'm going to show you something that you're probably not aware of. And this is where I say, even some of the most experienced traders in here, they look at this and they go, you're crazy. You just sold an option that has 94 days. 94 days. Why would you ever do that, Don? Because immediately you're thinking to yourself, why do we sell options so far out in time? In my previous example, I sold options a few months out. Typically, traders sell short-dated options, right? That's what you're thinking. I know you're thinking that, but therein lies why you're actually tuning into the webcast. It's criteria, and it's what we do here at TheoTRADE. Ultima, okay, it's not what you think. It's not what you think it is. Most people are very familiar with this time decay graph, okay? How many people have ever seen that? And again, I'm kind of going back and forth between this and a live trading application because I want you to understand in context of the marketplace. But a lot of people are familiar with time decay. And time decay, it's called theta. Theta, okay, burns. And the closer you come to expiration, the faster the option is going to burn. What if everything that you learned about theta, okay, doesn't necessarily apply? What if the option that I just sold, the 500 call that has 3 months, what if it burns incredibly fast? Huh? Okay, what if it burns incredibly fast? Well, it does, because I'm going to tell you right now, what's going to happen here is we're going to fast forward. And when I say fast forward, we're going to look, okay, well, like we just did at the 94-day expiration. And that 94-day expiration, okay, those 500 calls, I just sold them for $1.12. Now they are $1.12, okay? And we're going to fast forward. When I say fast forward, we're going to look at the 500 calls. Now, I just sold 500 calls, but we're not going to look at the 500 calls, okay, for the month of March. Now we're going to look at the 500 calls for the month of February. Why? Because if you want to know what a 500 call is going to be worth, if you want to know what a 500 call is going to be worth 28 days from now, look at a 500 call, well, 28 days from now, okay, when there's 66 days left. And what am I going to do? 28 days from now, I can turn around and I can actually buy this back. Okay, I can buy it back. What am I doing? I'm buying back the 15th, okay, of March expiration. And I'm going to buy back those 500 calls. And what are they going to cost me at that point? Let's get crazy. Let's say they cost me 42 cents. What if you could make, okay, between 50 or 60%, in this case, it's basically 60%, right? In what? 28 days or less without absorbing huge risk. Where's the huge risk? You're making 60% on your premium. How many people can do that? And people look at this constantly. We've been talking about Ultima trades since 2020. We started running a live portfolio, live meaning executions in the portfolio, in 2021. There was a dramatic shift in skew, okay, in 2020, opening up the door to this particular trade. You can make over 60% in less than 30 days without absorbing any catastrophic amounts of risk. And the decay rate is phenomenally large. Now, most people are like, well, what if it rallies? We're going to cover that. What if it sells off? We're going to cover that. What I want you to understand, though, at this point, okay, is where you're making 60%. Does everybody actually understand that? Where you're actually making 60%? Okay, we okay? I'm okay to go. One of the most important things about today's session, it's not, me learning. I've been trading stuff for, since I'm a kid, but it's your understanding. The trade could not be more simplistic. What do? I sell a call. Then what do? I wait 28 days and I buy it back. That's it. So I just sell something and I just buy that something back. And I want to reiterate how incredibly high the probability of this trade happens to be. Let's go 94 days out and let's actually put what we term probability out of the money. For those of you not familiar with the calculation of probability out of the money, okay, here it is. This is probability OTM. And what's the probability on the 500 calls is right there. It's basically 90, it's over 90%. Now, that's a 90% probability if you held the trade for 94 days. We're not going to hold the trade for 94 days. We're going to hold the trade for like 30 days. Okay. And here's the interesting thing. Somebody said, yeah, thanks to time decay. But here's the interesting irony. It's not time decay. It's Ultima. Ultima. Okay. Now, when people hear about Ultima, and that's obviously the name of what we're talking about here, right? When people hear Ultima, they're like, Ultima, Ultima alert. First of all, okay, Ultima is not ultimate. Ultima, it's the volatility of the volatility of the volatility. How are we making money in this? Ultima. What is Ultima? The volatility of the volatility. There's an actual decay rate, if you will, associated with volatility of options this far out in time. Okay. And that is predominantly how you can make 60+%. Now, after you actually learn to make 60%, what's the key in here? Okay. Repeat it. The key in here is to do it again and again and again and again as many times as humanly possible. Does that make sense to you guys? Okay. Look, if you want to learn this stuff, right? Yes, it is absolutely as easy as sell something, okay, and then turn around and buy it back. It is that easy, but time out for a second. The key to it is trying to repeat it again and again and again and again. We actually can build, if you will, what we term inventory. Like if you were going out, okay, and you were selling a product, let's say you sell, okay, pens on the internet. You sell a pen on the internet, right? And every time you sell a pen, you make basically 50% in margin. This trade made 60%, but okay, you make basically 50%. Every time you sell a pen, you're selling a pen for $1, but you're able to buy that pen for what? Okay, just a pen, like an actual pen, right? You sell the pen for $1, but you can buy those pens in bulk for 50 cents. The key at that point is what? It's volume. Do more. Okay. Does that make sense to everybody? Do more. Try to do more. Want to do more. Because you do more, okay, that's more times you're actually going to turn over your money. How you use your capital, okay, is instrumental in this point. Now, does anybody want to see any other examples in here? Okay, we're just going to accept it. I mean, look, you can do this also in like the QQQ. You want to do it in the QQQ, that's fine. Okay, I'll use the exact same expiration in the QQQ just to make a quick point, right? So we'll come down here and kind of pinpoint something. This is about $1.20. Okay, it's the 445s. And here, I'll just script it up here really quick. This is the 445 calls. Okay, and they're trading right now for $1.20. Again, this happens to be a March of 15 expiration. Now, all things being equal, if I were to fast forward, close that up, open up the 66-day options, okay? Whoops, apologize there. Okay, open up those 66-day options, look at the 445s in here. What are they trading for? I love this. They're trading for 47 cents. Okay, so I sold them for $1.20. I'll buy them back, okay, for about 47 cents. Done. It's between 50 and 60% every time. Ultima is phenomenal in here. Okay. And again, now we're going to get into the point where people constantly fight me and they say, well, okay, that's cool. And I get it, but what about margin? Anybody concerned about margin? Seriously, is anybody here concerned about margin? Because I want to address everything that you worry about as a trader. All right. You know, you're in this business and you want to address those things. Okay. Or people talk about like day trading margin. You can completely circumnavigate heavy margin on here, completely circumnavigate the margin. How do you do that? All right. Well, I'm going to pull up a product called a micro. Now, this is a micro S&P. Now, I want to just highlight this for a second. If you can see it on your screen, it says micro E-mini S&P. Now, this is a futures contract. You go, I'm not ready. I'm not ready. Hold me. Okay. We're not really going to trade the underlying futures contract, but what we are going to trade is an option on a futures contract. So if I open up a 94-day, I'll scroll down and scroll down. Instead of it being 500, okay, it's going to be up here at the 5,000. You're like, sweet. Okay. So I can come in here and I can actually trade, and I'll pick a different one here. I can trade options, okay? Options on what we term futures contracts, right? Options on futures contracts. And in this case, you hit confirm and send. The margin in here is nominal. Margin is nominal. It's less, okay? It's less than, in this case, about $600. It's less than $600. In fact, I have another account. Bear with me here if I actually pop this account open, okay? I have another account right here, and I'm actually going to pull up. Okay, now I want you guys to know this is a $5,000 account. It's literally a $5,000 account. And I'm going to go out, okay, and I'm going to load up a similar trade to what we did earlier, okay, in the micros. And in this case, here's the 5,000 strike. I'm going to click on that little monkey right there. And when I hit review and send, what I want you to see, I know this is like blaring bright right there. It's a 600. Oh, I'm going to change the color so you guys can see this a little bit better. I do apologize, okay, but the color just in here is going to matter right there. It's a 600, okay, and $68 margin requirement to actually sell that. All right, that's it. So if you say I can't do this with a $2,000 account, of course you can. Of course you can do this with a $2,000 account, right? That's fine. It's fair game in essence to be able to do that. So great. You know, I mean, the theta decay, that's not what we're about. What we're about over here, okay, is selling some out of the money premium. Now, we're going to get a little bit deeper. We okay? Because what happens to a lot of people in these trades is the 90% probability and the 10% hammer. 90% sounds great. It sounds lovely. But 10% of the time, the market can crush you. Remember, we're doing a trade that has like 90% probability. But 10% of the time, the market can just rip your face right off. High probability strategies, when you're wrong, you get hammered. And the market's just evil enough to allow you to make money 3 or 4 times. This is exactly what I was alluding to earlier, is what happens to people is they make money, and 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 they just go train wreck. Your losses end up exceeding your gains on the previous 3 or 5 trades. And a lot of people have been through that. They do this in an iron condor. Like people do this all the time in an iron condor. How many people have ever done something like this in an iron condor? Okay. For those of you that have no idea what an iron condor is, I'll just sketch it out really quick. This is an iron condor where you sell out of the money junk and you buy other out of the money junk. And you just pray that we stay in the middle, right? And the first time you do it, check, you make money. The second time you do it, check, you make money. The third time you do it, check, you make money. By the fourth time you do it, you're like, I'm huge. You do more contracts and the market moves huge and you end up puking up your guts and there's nothing left, okay? And literally I've watched people time and again wipe out half their account, 3/4 of their account. You go, how do you know that? Because I could see your account for 15 years. Like you're not going to surprise me with a lot of stuff that way, right? And I mean that, like, look, you're not going to surprise me with like, oh no, he's never seen this before. Of course I've seen it. You know, you guys got to understand something about me. I've seen everything. The buck stops here. If you've been in a crappy position, believe me, I've seen it before. If you've had a great position, believe me, I've seen it before. You're not going to come across anything in trading that I haven't seen. You know, it's kind of cool because at 15 years inside of a brokerage world, literally we studied retail traders every way, shape, or form. If you tell me I did an iron condor, I'll tell you exactly what happened in your iron condor. You know, not just one of them, but if you traded like, you know, a few dozen iron condors, it ends up in disaster. And you guys know that, right? And hopefully somebody listening over here, anybody willing to admit that one? I've traded an iron condor and yes, sir, it ended up in disaster. Come on, chat in, right? Chat in. Again, admitting it is the first step today. Again, what we are really good at TheoTRADE, it's not just what works. It's what works best for retail traders. What's going to work best in your account is the most essential thing, right? And then people turn around and whenever they take losses, they're like, I can fix it. I know I can fix it. That's a very dirty word in trading. 15 years, I'm a total cynic about fixing stuff. Good trades gone bad, okay? You blow something up, you got to let it go. Look, you got to learn how to do this the right way. You know, if somebody took a car and drove it off a cliff and brought it to a body shop, they'd say it's a piece of junk, let it go. I'd say the same thing about your trades. Okay. We're going to learn how to properly structure everything in here. So let's start, okay, to really put the pieces together. If you want to learn to do this, let's really start to put the pieces together. First of all, the product, when I say product, what I was trading earlier is spiders. Spiders are very easy, if you will, to explain because most people are familiar with them. And I want you to see, okay, do I have positions in here? Of course I do. Look at all the positions in here. I got positions on my positions. What I want you to see though, you know, a moment ago, and I'll go back to the PowerPoint, a moment ago, we were talking about just selling some junk up here. Couldn't we also sell stuff down here? Could we? Of course we could. When I talk about that, you know, if the market's in the middle over here, I could sell some stuff out here, sell a little stuff out here. Okay. As long as we end up somewhere in here, we're going to be good to go. That's right. But there's more to it. There's more to it. Okay. What I want you to focus on just for the next moment is we're looking at a $462 product. You don't just sell calls. You could also sell puts. And you want to know something crazy about the puts? Okay. There's something crazy about the puts. By the way, somebody was like, yeah, I lost on iron condors, but I also won on them too. You should win. Okay. You should win. And then you just get absolutely killed. Most people, okay, most people end up long term, they lose money in iron condors. And this, okay, this has got, you know, we're in 3 years of profitability and track records. We're not just going to sell calls, we're also going to sell the puts. Okay. And the puts are going to have upwards of a 90% probability. But here's the crazy thing. Look how much the puts are trading for. They're double the calls. They're double the calls. So I'm going to bring this back over here. Okay. And I want you to understand something. So we're going to look at the market, and this market's going to be in the SPY. So I'll give you an example. Whoops. I'm going to give you an example right here. Okay. In SPY. And SPY is trading at, let's just call it an even whoops. Okay. I'm going to get this right. 460. SPY is trading at 460. Just like I did a moment ago, we're going to go out and we're going to sell. What did we sell? A 500 call. And for that, we're going to collect $1. Simultaneously, we're going to go out, let's go all the way out here and sell. Okay. And we're going to call this a 410 put. And that's actually going to also be trading for $2. Now, does that make sense? So I'm actually going to sell on both sides. One of the reasons you do this, it only ties up margin one time. It does not tie up margin on both sides. We're not going to stop there. The key, all right, you want to make good money. 28 days from now, you can pull this off. But the key is to keep inventory going. So if the market rallies up, we could turn around, maybe end up selling, for instance, I don't know, like the 510 calls, collect another $1 there. Before you know it, you might be selling, okay, like the 400 put, collect, say, another $2, and I'm just rounding over here. This is inventory, okay? We could turn around, maybe even sell, right? 415 puts, market rallies a little bit, another $2 over there, okay? Turn around over here, sell for what? 490 calls, collect $1. People, that is inventory. But here's the whole key. Now, somebody was just talking about taking a loss in iron condors, right? And again, it's, you know, I've studied the trades, and I don't study like, you know, one or two. I don't like, you know, oh, let's look at Mike's account and study that. We looked at subsections of hundreds of thousands of trades, right? Hundreds of thousands of clientele. It's 7 million clients, of which at the time I was there, over 1 million accounts were extraordinarily active, okay, in option strategies. Think about the data that you get off. That's phenomenal. Okay, so you get to see basically everything. This inventory right here, this is trading. Okay, but there's one critical piece missing. What if the market explodes higher, okay, or crashes? What are you? Okay, you're done. You're done for. Enter what we term, okay, the hedges. Enter the hedges. There are three, okay, three primary hedges that we use. One of them is known as an RTKS. It's a risk twist. The other one is a VVS. Okay, VVS actually means a VIX vol. Okay, and the last one is called a gamma iron. The gamma iron. This, people, okay, these are your hedges. Look, I was talking about earlier how if you wanted to go on the internet, okay, and you wanted to sell, for instance, pens, you could sell these pens for $1. But you're buying them in bulk, maybe for 50 cents, and you're making some good money. At that point, the name of the game is to churn through volume. This is your volume. But the only way, and I mean the only way that you're going to survive in this marketplace is to put in some type of a hedge. Look, if you were in the pen business, you have to have insurance, you have to have employees. There's always going to be a cost of doing business. In this case, a VIX vol spread. Let me just point out right here, we're going to place a very minute trade. Okay. It's going to be called a VIX, okay, vol spread. VIX vol spread. What is it? This little trade. How many people here know what the VIX is? Right? It's the S&P 500 volatility index. And you know this, if the market goes down, the VIX typically goes where? You guys tell me. Market goes down, VIX goes where? Okay, up. And up dramatically, right? Explosive, if you will, to the upside. So explosive to the upside. Market goes down, okay? VIX explodes. Again, just explodes to the upside. And I'm not talking a little bit of a sell-off. I'm talking a just horrendous, sell-off, because that's the only thing that's getting down to 415 anyway. We're going to have a very, very small hedge in here. Ultimately, market comes ripping down. This little VIX volatility spread explodes in value, okay, and covers a substantial, not all, but a substantial amount of risk. This little hedge, okay, costs a very, very nominal amount, but it'll keep you alive. You don't trade this strategy without some type of a hedge. Then people will, well, what about the upside? We have a strategy called the gamma iron. We explode to the upside, it'll catch the gamma iron to the upside, reduce risk. Okay. And again, this is essential. People will look at the premium selling and they'll be like, yeah, that's easy enough. But they miss the part about the hedging. Without some type of risk reduction, you don't stand a chance. You just do not stand a chance, because let's all be honest, you're going to wake up one day and what's going to happen? Markets are going to collapse. You're not going to be able to control that. I mean, we can tune in right now, and this could be a very docile day, and all of a sudden you look over here and you're like, what? Okay, look, timing the market tanking is impossible. Okay, it's impossible. You want to manage inventory. Okay, it's like the cost of doing business. And these hedges, like a VIX volatility spread, is a nominal cost. I can even show you how to do a VIX volatility spread, the hedge, for free. I don't want to get too wild, too complicated. I just want to make sure that everybody understands this. And I want to make sure you guys understand, because where a lot of people go wrong in this business, okay, this, oh, it's kind of complex. You're selling 3 of these and selling 3 of these and buying a VIX volatility spread. Here's the bottom line. Okay, here's the absolute bottom line. You ready? Go into the marketplace. I'm selling way out of the money junk. You can see it in my account, way out of the money junk. Okay, and I'm selling way out of the money junk. And then I'm just using, okay, a few strategies to mitigate or manage risk. And that is it. Okay. That is it. Okay. So I go out there and I, sell some out of the money junk, manage the risk, get back and try to produce profitability. And I'll tell you what, okay, in this marketplace, this crap works. The average hold time for these strategies, 28 days. The VIX volatility spread, you can put that sucker on for months. Hedges, though, are essential. Remember this, in every business, there's a cost to doing business. Okay. Don't find that out the hard way. Don't try to predict, like, I think it could crash now. What? Because the Fed's speaking tomorrow? Okay. It's what you don't know that can hurt you. All right. And what you don't know can always hurt you. Think about that for a second, because that is what you got to be careful of. Look, you need to learn how to do this, right? This is what you need in your life, because you can do this in a small account, nominal amount, $2,000, produces positive theta decay. Okay, can enhance existing positions, provides a high probability of success. The one thing, like, people look at that last slide and they're like, oh, it's all over, man. It's all over for me. Look at the slide. Like, look, this, okay, it's not that bad. It's not that bad. And it's essential, though, that you see that. You know what's harder? Look at an MACD, a Fibonacci, a Bollinger Band. People will do that, but they won't spend 5 minutes on learning inventory management. What do you think derivatives firms do? What do you think Citadel does? Right? I think that Ken Griffin is buying $1 billion estate, $1 billion estate, okay, in Miami, because he puts on a good position at a good time. Nobody trades that way, right? You just don't survive. It's not about timing. It's about inventory. And that's why it's so essential. Look, again, you need this in your life. You could be wrong in market direction, still produce profitable trades. You're never going to buy or sell the stock. Most of the time, as I said, it's really high probability. You're not even going to need the hedges most of the time. Look, selling premium could potentially bring in consistent returns while minimizing your risk. Okay. Now we're going to show you exactly, again, learning more about how to do this, but we're also going to discuss criteria. But before that, let's get to a few live trading examples. One of the things I want to stress to you, I say live trading. Okay. I am about to show you 18 months, again, 18 months of results, right? And when I say 18 months of results, okay, 18 months of results. We've got all kinds of different portfolios and so forth. And I really like to take people through this stuff. And when I say that, I mean, I like to take you through and see, hey, exactly what we're doing in the portfolio, okay, trade by trade, and I'll take you through 18 months of results. But even better than that, right? Here, even better than that, we'll go to this is actually the TheoTRADE site. We'll go right into the site here, okay? And you can look, there's different portfolios, but there's the Ultima TheoTheta. There's also a TheoTheta small. Now these are the portfolios. And when I say these are the portfolios, okay, we're actually looking in right now, opening trades, okay, and closed trades. It's everything that we do. As I said, one of the things that we're pretty adamant about here at Theo, okay, it's no holds barred approach. We let you see everything. And I'm going to show you right now, there's not like an egregious amount. We didn't have a trade for a full month. There was not a trade for a month. You're like, that's bad. It's not bad. This is not like, I need to do something. I need to do something. Look, you'll see like a little flurry of trades here, here, here. Okay, a little flurry of trades, little flurry of trades. Okay, then there's some quiet periods. It's only a few trades that you need to make a month. Like, for some reason, people are, I need to do more. I need to do more. Just open up some inventory. As I said, most of the stuff lasts about a month, and close the inventory, right? And this might look like a foreign language, but what it means is bought, okay? Vertical, sold, strangle. That's me opening up a call and a put, okay? I'll show you all of this, okay? These are the live trading examples. Variations of all the following trades can be done with as little as $2,000 in a funded brokerage account. It can be done inside of retirement accounts. Now, just hang with me. What you're looking at, this is part of the portfolio, okay? So it's kind of weird, if you will, to look like when I brought this up a second ago, you're like, okay, so you did this. That doesn't really even mean that much to me. What we did is we actually took my trades out of the thinkorswim platform. This is the thinkorswim platform. This is just copy and pasted from thinkorswim. In fact, if you're kind of curious where this comes from, as I said, we have very much a kind of a no holds barred approach here. under right here. Okay, well, here's spiders, but if you want to see some of the trades, one of the products I trade a lot is ES. Okay, and I can go back, for example, when I say I trade a lot, let's go back 300 days. What have I done over the last 300 days in the ES? The ES is the S&P, 62 fills. Okay, and you get to see all of it. Okay, to open to close, to open to close, to open to close, right? And we'll talk about some of the cost of the hedge in there. It's actually the cost of the hedge is nominal. And you can even do a VIX volatility spread for credit if you wanted to. I don't love doing it because it eats up margin. But this is every trade that I've done in the ES. Nevertheless, it's easier for me when I just take you through open and close and I matched them up. This is Tesla, short call, 58% return. Yes, I'm showing you all the way back to 2021. I'm going to scroll through quickly 18 months and then take you up to present date. So this is an opening position, okay, and the closing position, 58% return. There's a bond, okay. People go, I don't even know what bonds are. There's ZBs, 57% return. Bonds, 53% return. IWM, it's the Russell, 62% return. You're wondering where returns come from? There you go. Sell this, okay, buy it back here, $1.46, 56 cents, done. All right. And yeah, the exact date, time, everything is on here. IWM 53%, Tesla 76%, Spiders 60%. Now I'm going to start scrolling through here fast. Why? It's like 100 and some odd trades in here. Okay. And as I start to scroll through here, you're going to see, there's no question, the target return, okay, is about 50%. The target return, okay, as I keep scrolling through, is about 50%. And you just see, I trade the same thing again and again. IWM, and you saw like what? QQQ. Okay, look, there's a 19% loss. It happens. IWM, QQQ, IWM, IWM, 47%, QQQ, QQQ. Are you bored yet? Okay, right, it just keeps going. You know, bond short call, IWM, IWM, IWM. Okay, spiders, IWM. We're still in like March of 2021. And as I kind of speed up here, you're just seeing return after return after return. Okay, why? Because these trades have upwards of over a 90% probability. Now, when you gain a little bit more experience, they'll actually start to deviate and push you into bigger products. This is an ES short put. The ES is the equivalency of five SPY contracts. Okay, as I kind of scroll through here, you now see some ES. Once again, as you learn a little bit more, we'll actually deviate and step up the kind of strategy. This is what we call a Christmas tree. Now, I have a couple of Christmas trees on right now. You go, I've never heard of that before. Okay, here, you want to see a Christmas tree? This is a Christmas tree. It's a 1 by 3 by 4 by 5, right? It's that trade right there. And I just, here, I'll even show you my account. As I said, no holds barred approach. You want to see what I do? I show you everything I do. This is not 1 day back. Let's go like 30 days back and see if that encompasses. You know what? I think I have to go further. I apologize. I'm going to go like 50 days back. Trading a lot of Christmas tree spreads lately. Okay, here in the spiders, see this custom position here? This custom position was opened for $13. Okay, $13.28. And that one was closed right here for what? Basically a $4 debit. If you sold something for 13 bucks and you bought it back basically for $4, it's pretty good, isn't it? And by the way, somebody asked me, what was the cost of the hedge? What if I told you that this strategy had a hedge built in? There is no hedge. You don't need a hedge. Want to know why? Watch this when I create a duplicate order. Okay, the hedge is actually built in there. I'm buying one, okay, and it's got an internal hedge to it. It's gold, Jerry, it's gold. This is the kind of stuff that you want to learn. That's Ultima, okay? That's Ultima. QQQ, 57%, 53%, 55%, 19%, 57%, 50%, 54%, 50%, okay? And I'm just scrolling through. Ever increasing speed, another Christmas tree. This one I had to break up, but $22 credit. Closed for what? Spectacular. It's a 92% return. ES, 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 bond, ES, Okay, as I scroll through here, another Christmas tree spread. This one made $3,953 profit in one unit. And yeah, this is still in 2022. Okay, now we're in 2022, still trading the exact same way, same products again and again and again. Another Christmas tree spread in here. Okay, as you kind of scroll through. Now, okay, at that point, that's 18 months of results. Then you go, oh, what happened after 18 months? What happened? What happened? Okay, I'll tell you exactly what happened. That's when we went to the live trading. Like we go into here into TheoTRADE because it was driving me crazy copying and pasting all those trades. But where did we leave off? We left off in May, okay, of 22. Okay, here's June of 22. Open to open to open to close to close to close. Okay, couple were rolled. I rolled some stuff. Rolling stuff is just an evasive maneuvers. Okay, this is a hedge. It expired. By the way, all opening, closing, hedging positions, people, it's all in here. And I'm just going to take you right up to present time. Every trade that I have embarked upon for Ultima, okay, is all categorized. It's in here, every open and every closing trade. Now, this is a bigger portfolio. We also have what we call the TheoTheta small. And the small portfolio, you can do this with as little as $2,000 in the account. Okay. And there was a trade even today. I did a trade today in there. Even money trade, even money roll. Okay. I sold, I bought, I sold, I sold, I sold, I sold. Okay. Hedges, everything is in here. All right. All the closing trades are in here as well. All right. To your heart's content, there is a lot. Look, if you don't have a lot of time to do this, every trade shown today, and I mean every trade, is displayed live at TheoTRADE. Trade results, these are perfect for part-timers. Okay. If you have a phone, all right, we have an app. Okay. We have an app, and that app will literally, okay, shoot out all of these trades in real time. Look, selling premium is completely hands off. It uses set and forget order types. So a fraction of your time is enough to see results. As I showed you guys, okay, I'm not trading like a wild amount. And I actually like to show that because some people, were like, oh, we need more trades, more trades. Look, one of these is set up, this TheoTheta small is set up for a $5,000 account. The other thing is set up for a $50,000 account. It doesn't take a lot of capital, to do this. But I'll tell you, you don't have to do a lot of trades. Like you don't have to have 6 or 10 trades on. Put on a couple trades, right? Manage them, close them for 50%, move on. As I said, like we didn't have a trade for a month, and you go, that's not good. Why? Why is it not good that we didn't have a trade for a month? Okay, what are we doing? We're just leaving the trade on, letting it work. Things work and leave it alone. Look, TheoTRADE provides real-time trade alerts. What better time? Maybe you don't have a lot of time to learn a new skill set. Okay, that's why we do these real-time trade alerts. Okay, selling premium is a wonderful hedge for recessionary times. I threw that in there, recessionary times. Are we going into a recession? I don't know. The Fed's only been raising rates till 5.25, 5.50. Markets though could be in bouts of volatility for years to come. The only thing I'll stress over here, bouts of vol for years to come. Interest rates are not going away anytime soon. That's critical because that's going to keep everybody on edge. Look what our members are saying. Mike Smith, if you're serious about trading, TheoTRADE is by far the best resource out there. If you cannot make dollars, you're not paying attention. They even have a hands-off approach to trading as well. Okay, is if you don't really want to learn to trade on your own. Their instructor's the best in the business. It's June 13th, 2023. Characteristics of selling Ultima Premium. The attributes of selling high probability premium, undeniable. You never have to buy or sell the stock. Risk is limited to precisely your comfort level. You don't use a stop order. There is no stop order in here, okay? You can vary time frames, minimize your risk, right? Probability of profit is incredibly high. It's a perfect strategy to enhance a stock portfolio. So if you have a portfolio, you own some Microsofts or some NVIDIA, you can actually learn to sell and use Ultima against the portfolio. It's an excellent tool for those seeking returns to build an account. And those new products, what I was talking about with those micros, they allow for the sale of options in nearly any account size. Do not worry about margin. Don't worry about margin, okay? Building a portfolio of options. Look, the one thing people have to get over, do not let options intimidate you. Don't let them intimidate you. Let the alerts, okay, do the work for you. Selling premium can be done for minimal credits, okay, and minimal risk, right? Selling premium can initially be done for minimal credits and minimal risk, but you let the alerts do the work for you. If you want to learn to do it, fantastic. If you just want to let the alerts do it for you, fantastic. That works too. You can sell Ultima Premium and minimize risk, okay? You may not know a huge amount about options or have limited experience in placing option trades. As I said earlier, don't let the options portion of this intimidate you. Options will be the quickest, the fastest, the safest, the easiest way to get where you want to go in the stock market. Okay, you are going to need these strategies for the foreseeable market, future. And yes, there's this intimidation factor. I have to learn something. Anything worth doing, okay? There's a bit of a learning curve. But more importantly, that's exactly why we are now producing real-time trade alerts, okay, to hold your hand through that learning curve. We can show you how and when to sell premium in a matter of a couple of hours. And that's somebody with just zero experience. And then you just follow the alerts. Be prepared right now. This is what you need to know to successfully sell Ultima Premium for a living. What underlying stocks or indices make the best candidates? Think about that. What did we trade today? We traded some spiders, right? Traded some ES, some MES. Pretty straightforward. What volatility should I seek out? Ironically, if you do something like this now in Tesla, you're dead. Dead. Okay. You'll never be able to survive. You start looking like, oh man, there's so many things we can trade in so little time. Okay. No, you have to have the right volatility. Okay. What options expiration do I select? Look at options these days, just the spiders. Seriously. 0, 1, 2, 3, 6, 7, 8, 9, 10, 14. Look how many expirations there are. Should I use the 94? Why not the 129? Why not the 170, the quarterlies? Okay. Which expirations? A lot of expirations. Which is the right one? What should be the delta of the option I sell? That's probability. What options do I buy against my position? That basically means like, hey, that VIX vol hedge looked pretty good, but how many do I use? How, okay, do I build the position? Okay, how do I build a position? How many hedges do I need for what am I actually selling out there? Do I need a large amount of capital in my account to do this? No, we've gone over that. $2,000. Ideally, you want $5,000 to really kind of kickstart yourself. The $2,000, people, you can get it done. You can absolutely sell premium, okay, with $2,000 in your account. What is the right amount of risk for me? Right? So we can fine tune that. Like, again, one of the aspects here is when we start talking about hedging is how much hedge do you want? What are the percentage of returns supposed to be? 50%. Okay, how do I protect myself from market crashes when selling options? Maybe a VIX volatility spread. It could be a risk twist spread. It could be like a gamma iron condor. There's a lot, okay, of different ways to protect yourself, but you have to protect yourself from the idea of a marketplace crash. Let me show you exactly what we do here at TheoTRADE. TheoTRADE creates recipes in trading. I say recipes, it's detailed recipes, okay? A recipe, it's actually showing you step by step how to get in, how to get out, right? It's like a pre-flight checklist, and then we actually tell you what to do. What if we go up? What if we go down? And more importantly, the biggest differentiating factor of what we're now doing, we're not just here to educate. We are providing real-time alerts, okay, when trading opportunities arise. When I trade, you get a text message. I'll say it again. When I trade, you get a text message, and you can follow, okay, one of several different portfolios, or you can follow all the different portfolios. Look, trading is all about answering the what ifs. What might be a good stock or ETF candidate? Okay, what's the correct options expiration cycle? How much capital do I commit? What strike options do I sell? What strike options do I buy? How can I limit my risk? TheoTRADE has, okay, those answers, okay, and trade alerts. So as I said, we build recipes with definitive criteria. They're literally checklists for each, okay, each strategy and each unique variable that you're going to encounter, okay? That basically is like a pre-flight. If you stepped into the cockpit of a 737, You would go through a pre-flight checklist. And then, of course, when you're in the air, you know, what can happen? There's a lot of different variables. Look, most of the time with Ultima trades, nothing happens. Like 95% of the time, nothing happens. But you still have to know what to do. What if we go up huge? What if we crash? Okay. Look, there's a lot of different steps to take. What if expiration's coming? How do I limit my risk? Okay. And again, we take it a step beyond. Welcome to Ultima Alerts. TheoTRADE becomes the answer to your question. We give the right probability. How many option contracts? When do you close your premium sell? What if we sell off big? Do I bail out of a trade? You know, well, what if we rally massively? Can I fix a losing position? It's about how, it's about when, it's about why, it's about what price. And I'm telling you, it's just the beginning of the many variables you're going to face while selling options and Ultima options for a living. Look, you can read what selling Ultima premium is. I think a lot of people do this. They go and they Google, right? They Google, you know, selling premium, 10,000 pages come up. Okay. Maybe you've even built a couple of trades, you know, on your own. Literally, people go through this 10,000 pages, you know, on selling premium. You know what they're not going to have? Okay. They're not going to have the criteria. They're not going to give you the specifics. They're not going to give you what underlying. Okay. They're definitely not going to give you trade alerts. But it's so critical you guys understand that criteria. It's the how, it's the when, it's the why, it's at what price. That's what criteria is. Okay. Look, anybody can teach you to sell. I can sell an option, but you need TheoTRADE's alerts. 25 plus years trading experience. That's just me. I had access to client order flow for 15 years, viewed and studied millions of trading accounts, and I ran education at TD Ameritrade and thinkorswim for over 15 years. And at that time, we had the largest option order flow in the industry. Okay. Ultima Trade Alerts is the recipe for success. The following strategy and the corresponding criteria requires the utmost attention to detail. We literally spent years fine-tuning this trade setup and its criteria. And now, real-time alerts. And again, that's the biggest differentiating factor. In the last 2 years, we at TheoTRADE went to real-time alerts. People said, look, the education is phenomenal, second to none. We took it a step further. We give you real-time alerts and the convenience of your mobile device. Literally, there is a TheoTRADE app for you. The Ultima Income Generator alerts. I happen to be the trader for these portfolios. I am the trader. There is a TheoTheta small portfolio and a TheoTheta, what we term large portfolio. Okay, the TheoTheta small, if you so choose. Okay, you can follow either of these. You are given access to both. And we're going to talk about all the things, okay, that are encompassed here at TheoTRADE. Okay, today we are actually giving you a full, okay, 12 months, okay, for $799. It's a full 12 months for $799. This is something we do, okay, and did as a Black Friday special. It is an absolute smash hit, okay? So we've actually brought it back for this, okay, today and only today. Now, I want to kind of reiterate something. In addition to this, and before we go any further, you're not just, okay, you're not just receiving, okay, access to that. You're also going to receive access, okay, to Brandon Chapman's 6-week, again, 6-week, okay, mentorship beginning Tuesday, December 19th. That's just around the corner. It's literally, it's a week away, okay? It begins. It has begun. No, it's going to begin very, very soon. One of the critical things, and I'm leaving this up here for just a moment, okay? And the reason I'm leaving it up here for just a moment is I want you to see this is a $1,000 mentorship. What we've actually done is if we've incorporated, okay, we've actually incorporated this now specifically into, okay, the program. And the reason we've done that is better results, okay? Your success is absolutely essential in this process over here. You know, and I don't take that like lightly, okay? Your success is just It's essential in this. And again, it's beginning Tuesday, all right? Tuesday, and that is December 19th. And I'm actually putting a note, okay? And will actually run, okay? It'll run from, I think it's 4:30 Eastern time, okay? 4:30 Eastern time, and it'll run right through until January, all right? Apologize, January 22nd. I want to make sure I had that one right, all right? Right through till January 22nd, okay? Critical though that I bring this up. When I say that, this, look, if you click on getting started now, just in here, that alone, okay, is $1,000. We're not doing that, okay? And I'm actually going to give you a link to this in just a second. It's a Black Friday special. We brought it back. It's TheoTRADE.com/BF799. Okay. It's TheoTRADE.com/B as in boy, F as in Frank, 799. Okay. It's $799. It's an entire year. As I said a moment ago, but it encompasses a lot more than I've covered. And I'm going to walk you through, okay, everything that's involved over here. And by the way, that's in the St. Croix house over here, but I'm not in there right now because there's no power there. TheoTRADE.com/BF799. Now, okay, I'll come back to that in just a moment. I want to encompass everything that you get over here. So TheoTRADE is a lot more than just alerts. Okay, what do we also provide to you? All right, come over here to TheoTRADE. This is our member chat room. Now this is live right now. Okay.
The keyword.
Right? That's Brandon Chapman.
Skewed distribution returns. What does this mean?
So Brandon Chapman's live right now. We actually broadcast live for 6.5 hours a day. Okay. 6.5 hours a day. You get to actually talk to other clients. There are literally, okay, hundreds and hundreds of clientele in here. Any given point in time throughout the course of a day, there's upwards of over 3,000 people that visit the TheoTRADE chat room every single day. Total right now, okay, of just about 6,000 clientele in here. But this is broadcast live. You actually receive access to this. Okay. What else do you receive access to? If I cruise over here, let's go to the archives. Okay. This is a class archive. You're going to receive access for a period of a year to everything that we've done, okay, since inception. Meaning, like, you come to option strategies, right? Catapult trading, flyby, Z spreads, inflection point, income accelerator, Ultima. Ultima is what we're talking about today. There's variations of Ultima. It's called a catapult. There's variations of Ultima. It's called inflection point. Okay. All of these classes, every single one of them, you have access to. Okay. Is it overwhelming? Yeah. But you know what? Okay. This, you don't ever have to go to this depth. And you go, well, that's options. I'm not really an options guy. Okay. So maybe you're into futures. Maybe you're into technical analysis. Okay. Technical analysis. This archive is second to none. Jeff Bierman, Blake Young, Brandon Chapman. Okay. I mean, now we have Gianni just joined us recently. Okay. So we are stacked. Look how many technical analysis, and every single course has highly detailed criteria in it. We have options for newbies classes. We even have mindset classes. Okay. Every genre of trade you can imagine. It's all part of it. And again, I want to reiterate, it's $799, okay, for the entire year. Before I go any further, that will also have a 90-day money back guarantee on it. And there's no stipulations. I'll show you everything. That is for a full 12 months access to TheoTRADE. I mean, look, you can also have unlimited email support, meaning you can email us with trade related questions. For $800, literally for $800, I think it's not worth it to be able to email somebody, okay, about this. But for people who are really coming for, okay, right now for Ultima, it's a small portfolio and the TheoTheta large portfolio. Now, the Ultima income generator alerts. I happen to be the trader and instructor. It's a positive theta. It's Ultima premium selling. It's a no holds barred trading approach. You can see everything I'm doing. It's full disclosure on all trades, all opening trades, okay, all closing trades. It's in their hedging positions. You get to see me do everything. And again, introducing TheoTheta small for accounts that are like $5,000, right? Now, the bonus, probably the biggest bonus in here, okay, This is exactly what I was alluding to a moment ago. Brandon Chapman, okay, will start and he'll kick off a 6-week, okay, mastermind. Starts Tuesday, December 19th. It'll finally end January, okay, 22nd. It's an hour long, okay, for 6 weeks. It's normally $1,000 and we're including it, okay? Expert guidance. He's going to take you through Ultima trades, right? It's full Q&A sessions. You have the opportunity to ask questions, clarify any doubts you may have about Ultima trade, skill building. The mastermind's actually going to focus on building your skills and confidence, okay, turning you into a much more proficient Ultima trader. Even better, Brandon's actually going to take you through your first couple of Ultima trades. Like he's there to hold your hand, get into the supportive community, like-minded individuals. And again, you kind of share experiences, ask other traders, okay, and Brandon some questions in there. It's an additional $1,000 we're giving it to you. And I want to make that really clear, okay? That's part of this. So this Black Friday special, clearly it's not Black Friday. We're just before Christmas, okay? It was such a smash hit. We're going to do it again. This is it for the year, okay? And when I say this is it, okay? This is it. It's TheoTRADE.com/B as in boy, F as in Frank, 799, okay? By the way, on that page, let's cruise over there really quickly. Make sure that everybody actually sees the web address in here, TheoTRADE.com/BF799. Click add to cart. Okay. I just want to take you through this. It's $799. Or, okay, you could do payments. You could do payments if you so choose. That is completely up to you, right? You just pay the $799. Either way, and I think it's critical to mention this, either way, okay, we will also provide to you, okay, not just the mentorship, but there's a TheoTRADE, okay, again, riskless trade. So the entire thing is, it's a money back guarantee. If you're not satisfied anytime in the next 90 days, just email support@theotrade.com, receive a full refund, okay? There are no stipulations to the money back guarantee. By the way, you don't have to call us. You don't have to do a little dance, make a little love, get down tonight. It's just 90 days. Like the one thing I always try to embody here is we want people that want to be here. There's just no excuses, no questions, no commentary. Just email us. Okay. It's only $799. And it's one of the reasons, like, how'd you guys get 6,000 people? Well, this $799 deal comes around very infrequently. Okay. But it was a smash hit. And I did this a couple of weeks ago. It was such a smash hit. I'm like, bringing it back. I'm bringing it back specifically for today and today only. Again, that next mentorship kicks off, okay, December 19th. So that's critical. Like you got to get in, take advantage of it, get going on it now. I mean, it's critical that you guys see that is you do actually have limited time between now and then. And we do that obviously to incentivize, okay, to incentivize people to enroll for it. And again, it's completely up to you, but we want you in there, ready to go, okay? So get up to speed. Again, you have what, December 19th? Do you have to study or do anything before December 19th? Absolutely not. That's what this mastermind is to get you up to speed specifically for Ultima trades. And again, even after the mastermind, everything, it's still a riskless trade. It's a riskless trade. Look, Ultima alerts to the convenience of your mobile device. So there is a TheoTRADE app, okay, both Google and Apple, right? So I have to name all the different app stores now, but both Google and Apple, there's a TheoTRADE mobile application. We do text messaging, but we also do push notification, okay? You have access to the portfolio. Here's obviously the 2022 Ultima portfolio returns, okay, at 56.6%. We do a weekly update video. The weekly update video literally is a 12-minute video shot every Friday, okay? Just walks you through, okay? What does it walk you through? Everything I did that week. A lot of times just updating you, okay, on kind of what I'm thinking and like, hey, I'm going to do this trade and this is what I'm going to do. And if you're curious, again, these update videos, they get you caught up to speed. This is what a text message looks like. This is one we actually did today, right? This happened to be a roll. We moved a position from, okay, February all the way out to April. It's a roll, and it was what we call an even money roll. Even money roll, right? So another one. This is like back in September. Okay, this is buy for 50% profit. Here's another one. Okay, uh, closing 50% profit. These are what the text messages look like. Right? If you can see this, sell. Okay, a 48.50 call to the Jan 19. Sell a 36.50 put. Done. Okay, so what? $31.75 credit. Right? Here we go. Paul M. The education is second to none. And if you're a novice when it comes to markets and trading, the training material is superb, professional, organized, and written in plain English. Professionals at TheoTRADE have all the content. Okay. You could get to whatever level you want or take your trading investing education skill to. Been a member for 3 years and I'm still growing and learning, really enjoying the experience. There's another one. This is actually from a gentleman with the name Pat. Personal situation, live in Western Australia, current TheoTRADE member, completed masterclass with Dom. Currently, okay, live Tasty Trade account, right? Grown account from $18,000 US to $31,000 in 12 months using the micros. So you kind of ask, like, can you make money in the micros? You can, and it's critical, right? Like last one over here, traded options and futures for several years, grow a small account with micros. Was a great review. Still trade my PM account on TOS, which is thinkorswim, but I've started trading Tasty to learn their system. I learned more about Tasty today in review. Okay, I've been able to piece together from just the trading platform good stuff. For your information, I trade my daughter's futures account for her. ES micros only, doubled the value in 2 years, even through 2022. The inflection spread saved the day twice. Just wanted to pass along. Okay, regards from Jim. All right, took an account from 12,000 to over 32,000 in 18 months. Okay, been doing your method. Thanks again. Right, goes on and on. So again, consistent, valuable education that is supported on an ongoing basis. Okay, look, get into TheoTRADE. Get into TheoTRADE now. We're going to work with you directly. There are 30 spots on the TheoTRADE riskless trade deal. Okay, we do that to incentivize you. Moreover, I mean, look, okay, the date for the mentorship is coming up. If you didn't need more of an incentive, the date for the mentorship is literally coming up. It's December 19th. Okay, you have a week, but obviously we want you enrolled. We want you looking through some of the course materials over here, and we want you ready for it. Okay, and we're giving you literally a 6-week mentorship. And the reason we do that, okay, it's extremely immersive experience. And those that have that immersive experience and go through Brandon Chapman's Beginner's Guide to Ultimate Trades, his mastermind, that immersive experience, okay, the success rate is phenomenal. And people have to understand the only way, okay, that we here at TheoTRADE succeed is if people, okay, 1 year, no, we want you here forever, okay? And you know what? You can receive trade alerts. We've had people here for, pretty much since inception of TheoTRADE. It's important that you understand the only way that you succeed, okay, is by making money. The only way you succeed, you make money. The only way you actually, are a member of TheoTRADE, ultimately, is if you're happy and making money. That's why we have 6,000 clientele here, okay? I mentioned this earlier, but I want to reiterate it. We provide unlimited email mentoring. Very few people will ever answer a trade-related question. Like there's nobody out there to, to ask questions to anymore. We'll do it. Okay. You have questions. To me, that alone, look, there's nobody else to talk to these days. That unto itself, okay, is worth $800 for the year. And I really mean that. Like that unto itself, you just had somebody bounce an idea off of, once in a blue moon. You think it's not worth $800 for it? It's huge. Okay. It's one of the most critical aspects, I think, in success, okay, of these clientele. By the way, get ready for text messages. Those will actually be out. It's a 602 number that the text messages come from. Again, it's theotrade.com/BF799. Okay. It's theotrade.com/BF. B as in boy. Okay. I just want to reiterate that. B as in boy, F as in Frank, 799. Okay. And that, again, $799, it includes a full 12 months of TheoTRADE. Somebody asked a moment ago, well, what happens after 12 months? Okay. You will at that point be asked, look, there's no, we don't auto bill, we don't auto renew anything. At that point, if we want to do it again, you pay again at that point. Okay. This is not like an introductory price or anything. You can actually renew at that point for $7.99. So it's TheoTRADE.com/799. One other quick thing in here that always comes up when you're filling out, okay, the enrollment form, you're filling this out and you go over here and you're like, okay, pay with a credit card. Make sure, okay, make sure to put your cell phone number in there because they will automatically enroll you, okay, for the text alerts. So make sure to put your cell phone number in there. I think that's pretty critical. And again, you get access to everything that we do here at TheoTRADE, all the different portfolios, TheoTheta large, TheoTheta small, okay, can't stress enough. There's one portfolio, okay, that's people that have $50,000 and more. There's another portfolio that is $5,000. You could trade the small portfolio. This is the TheoTheta small portfolio. You could trade this portfolio with as little as $2,000. I think $5,000 is a pretty good suggestion, though, right off the bat. All right. Been a subscriber for about 4 years. This is the only organization that has actually taught me how to consistently make money in the markets. Appreciate that. Comes from Judd. Listen, your questions answered. We're going to answer a couple of questions and try to answer a few questions that are coming specific from the chat room in there as well. Okay. Kim was saying, if margin is an issue in spiders, I'm going to answer a couple of these questions. What about margin and selling naked spiders? Kim, if margin is an issue in spiders, you just trade the micros or the ES. Completely circumnavigates the margin requirement. And I think that that's one of the more critical aspects of this is just change the product. All right. So people always ask pretty similar questions. So I'm just going to run through this. And again, as I'm doing this, just go to TheoTRADE.com/BF799. It's also, we are, as I said, including it's a full, 90-day riskless trade on here. There's absolutely no risk. Okay. And I mean, no uncertain terms, anything in the next 90 days, 90 days from the day you enroll. Okay. You just email us. Look, we want people that want to be here. So a couple things. People constantly ask, what do I need to get started? Basically, you need a laptop, okay, internet connection. And you know what? I don't even think you need a laptop anymore. I could probably make the argument that you just use your phone. You can execute anything and everything now off of your phone. So if you have any mobile device, and I apologize, I don't really have, I can try to turn the camera on over here. You want the camera on? Here, okay. A mobile device. It's weird with the camera on over here, okay. I don't like it. I don't have like good, okay. What I could show you though is the view on the other side over here, but it is spectacular, spectacular view from this office. Anyway, okay, your mobile device. Just go in here, Theo. Okay. Oh man, it doesn't pick up on here. Okay, it's not picking up. Anyway, the mobile device, which I'm doing a terrible, terrible job of displaying this right now. Okay, here you can see everything right on here, and it actually provides all the updates as we go through. In fact, text messaging, if you're kind of curious how the text messaging works. All right, bear with me over here because I'm going to show you right now. There's text messages actually popping out earlier today. Every single strategy, everything. So you could probably make the argument that you could do this right now. I know it's weird in here, but you could do this directly off of a cell phone. All execution, everything directly off of a cell phone. It's pretty reasonable. Next thing, this is not a membership. We're going to auto renew you. We do not auto renew. We don't do that. Okay. A lot of people don't like auto renew. We don't do it. Number 3, we're now providing weekly update videos. The weekly update videos, if you're kind of inclined to look at that, for weekly update videos, you actually just dig into these portfolios right here under portfolios. Okay, it's Ultima trades. Okay, and what this is, right? Let's take you right in here. They're 10 to 12 minute videos. Okay. And that 10 to 12-minute video explains every detail. Okay. And I just do it on a Friday. Obviously, this one's fairly recent. It came from Friday. Anyway, I give you every detail of what I am going to do. And I record all of these myself. Like this is and 60 handle moves on an intraday basis. Like it's real out there. Yeah. So I actually cover in 10 to 12 minutes updates of everything I'm doing in that particular portfolio. So all right, number 4. We provide you access to TheoTRADE Mobile. I was just showing you that. Receive push notifications. Add your cell phone number when enrolling. Okay. Receive text alerts. So there's once in a while, the reason we have push notification and text alerts, a lot of people that are, clientele from overseas. So if you're overseas and cannot receive United States text messaging, that's not an issue for us. Okay. Not an issue at all. Because in effect, okay, we're good to go. We're good to go because we actually have push notification. So by all means, all right, you're as I said, you're good to go on that front. We have text messaging and push notification. You can actually receive this for anywhere in the world. And you're, as I said, you're good to go. All right, number 6, email us anytime. When I say email us anytime, you can email us anytime and ask trade related questions. Okay, response within 24 hours. The only reason we put the response within 24 hours, please do not email us. Okay, with 2 minutes to go to a cash close on a Friday afternoon. Like people are like emailing us like, I need some help, and there's like 2 minutes to go and the bell's going off. Like, we're traders, we trade. So give us a day and we'll turn around. Trade related questions though is okay. That's always important to me, but that people know that you can actually, trade related questions. It's good to go. All right. Variations of the trades are available inside of an IRA or retirement account. You can do that. Okay. So you can do any of these trades in a retirement account. In fact, one of my accounts is a retirement account. We at TheoTRADE can help you get approved for options, okay, through several major brokers. So if you have any problems with this, okay, any problems whatsoever, okay, we can actually help you get approval through several different brokerage firms out there. Remember, there are 30 riskless spots available. Get results, take action, enroll for TheoTRADE now. There's no risk. I mean, that's the one thing I try to also kind of embody today. There's no risk. Okay, you're fine. And if you have questions right now after today, by all means, again, it's theotrade.com/BF. I'll take you back over to this main page again, right? Pop up the link over here. It's theotrade.com/B as in boy, F as in Frank, 799. Just simply click add to cart. You're good to go. I'm going to answer some questions here. Okay. Just in the chat room, kind of separately, but I want to thank everybody for having tuned in today. Okay, it's look at this, we got you out of here in pretty good amount of time. Please, if you have some questions, hang out afterwards, fire away inside of the Q&A or the webinar chat. We'll try to answer those for you. Again, it's theotrade.com/BF799. And remember, okay, it includes okay, a full mastermind, 6-week mastermind with Brandon Chapman, not to mention, of course, a money back guarantee in there. So thanks everybody for tuning in. Have a wonderful afternoon. Bye-bye.